Welcome to The Explainer. Today we are digging into the incredible story of a company called IREN. They're making a lightning-fast pivot, trying to transform themselves from a straightforward crypto miner into a potential AI infrastructure giant. It's a huge move, so let's break it down.
This quote right here, it really is the whole story in a nutshell. The journey from being seen as just a Bitcoin miner, something kind of niche, maybe a little speculative, to being talked about as a serious infrastructure company. That's the leap we're exploring today.
All right, so to really get where IREN is trying to go, you have to understand where it's been. And its story begins firmly in the world of Bitcoin.
And man, look at how fast this all happened. I mean, this wasn't some slow, gradual shift. The company started out as Iris Energy, and their whole game was mining Bitcoin using cheap, renewable power. But then boom, late 2024, they rebrand. By early 2025, they're going all in on GPUs and AI contracts. We're talking about a complete reinvention in just a few short months.
This just begs the question, right? You're probably thinking, wait a second, a Bitcoin miner suddenly decides to become an AI company? Why the huge change? What's the thinking behind this massive strategic pivot?
Okay, so let's get into the news story. This is the narrative that's really got investors and the market buzzing. IREN, the AI powerhouse.
And this is like night and day. The old IREN was basically riding the crypto roller coaster. Huge ups, huge downs, super volatile. The new IREN is trying to build something completely different. A business with stable, predictable revenue coming from AI contracts. They're trading the wild crypto speculation for a story about steady, long-term growth.
So what's actually under the hood here? What's the engine driving this thing? Because it's not just talk in a new name. There's some really big, concrete numbers and assets making this happen. It all starts with the hardware. We are talking about 23,000 high-performance GPUs. And let's be crystal clear here. This is not a small side project. This is a massive all-in bet. They are buying the essential tools needed to power the future of artificial intelligence.
And what do you do with all those GPUs? Well, the plan is to make some serious money. The company is projecting $500 million in annual recurring revenue by early 2026. That is the kind of number that makes investors sit up and really pay attention. It's their signal to the world that they're serious.
But here's the real secret sauce. The big question is, how can you do this and still make a profit? The answer is cheap power. I mean ridiculously cheap power. At just 3.5 cents per kilowatt hour, they have an absolutely massive competitive advantage. In the AI world, these GPUs guzzle electricity, so having the cheapest power is everything.
And see, that's the really clever part. That cheap power advantage they built for Bitcoin mining is now the perfect foundation for their AI ambitions. It's all part of this vertically integrated model. They own the land, they control the power, they have the hardware. This gives them total control over costs and the ability to scale up. It's not just one thing, it's this whole ecosystem that makes their stories so compelling.
Okay, it sounds like a perfect story, right? A total slam dunk. Well, not so fast. Like any story that sounds this good, you've got to look at the fine print. And there are some pretty significant risks here.
First up, can they actually pull this off? It's one thing to manage thousands of GPUs, but it's another thing entirely to scale to 100,000. Then you've got to worry about just getting the GPUs in the first place. Plus, they need cash to grow, and their stock is still kind of tied to the whims of the crypto market. Oh, and yeah, the CEO selling 1 million shares? That definitely got people's attention. And this chart tells such a fascinating story. You've got the market totally hyped up, pushing the stock price to the moon. But then you look at what the Wall Street analysts are saying, and their average price target is actually below the current price. That's a huge disconnect. It's the pros basically saying, whoa, slow down. Let's see you actually do it first. So, you've got this massive opportunity on one side, and some pretty serious risks on the other. Where does this all go? Well, let's game out 3 ways this story could end. So, the base case is they do what they say they're going to do. They hit their numbers and get a nice valuation bump. Then, there's the upside case. They totally knock it out of the park, grow even faster, and become a top-tier AI player. But there's also the downside. They stumble. Execution fails, the crypto market hurts them, and the whole growth story just falls apart. If that happens, the stock could see a very painful correction. And really, that's what this entire story boils down to. Is this a brilliant, historic pivot from one industry to the next, or is it a massive gamble built on a mountain of hype that's about to face a tough reality check?
We're about to find out, and their performance over the next year is going to tell us everything.